Hey, it's Sunday. Thanks for watching my video again this week. Let's have a look at some markets and find some trade ideas for you. This is the hourly chart for gold. Well, it's obvious gold is just swinging up and down. There are trend lines here that you could use on your chart, but really it's quite a random mess. And, the longer the market stays in this sort of random mess, the harder it is to identify low risk trade opportunities. Unfortunately, I thought we had a breakout to the downside here on Friday, so I was suggesting getting into a short position, hoping that we have a swing trade opportunity. But of course, the market just turned around, rocketed back up. So I'm going to leave gold alone for a little while. If you're a subscriber, then I have actually put some levels in the report, of course, if you want to scalp gold, but I'm not seeing any particular swing trade opportunity at this stage. Silver, however, is working a little bit better. We do have a bear trend in the short term to follow. As you can see, we were selling up at around 2260, 2270 on Friday, and that worked. That was the high for the day. Dollar index chart is messy. I like to keep an eye on the dollar index. I thought we had a bear trend, but this action on Friday has confused me. Strong bounce back. What I can say is previous swing lows, the trend lines that I put on the chart, they have created this resistance area, which certainly did work on Friday. I think we're probably going to establish a sideways range going forward up through the summer, which is frustrating for me. I don't like that kind of thing, but we'll do our best to trade it nonetheless. When you look at the daily chart, it only serves to remind us that the dollar is in a big sideways range, has been since December. So throughout the whole of this year so far, we've just seen this swinging backwards and forwards. We're stuck in the middle of the range, and even the moving averages on the daily chart for the dollar index are flatlining, just showing that we have been in a sideways trend for such a long period of time. I will find some trade ideas for you shortly, but in the meantime, I'm just going to show you the Aussie dollar pair that I usually enjoy trading, and I can usually find good opportunities, but this kind of thing is just messy. Sideways, broke to the downside, looked like we had a swing trade opportunity on a breakout, looked like we had a breakout trade. Then the market just roared up with a series of green candles. Look at that. We only had one red candle throughout the first 2 weeks of June. And now we've turned around and given up 50% of those gains in just over a week. A confusing picture. New Zealand dollar is probably even more confusing. Look at these moving averages, which have been flatlining now since March. If you have an idea of how to trade this, or if you've got some low risk trade ideas for the New Zealand dollar or the Australian dollar versus the US dollar, let me know. Put them in the comments box, because I can't make sense of this at all. At last, we have a trend. Dollar Swiss is clearly in a bear trend, has been since November. The moving averages and the Fibonacci levels are giving us areas where we can try low risk opportunities. Certainly the short sale around the 91.30 area at the beginning of the month worked really well. Couldn't quite get onto a short on some of the bounces back, didn't quite work, but you can see that there is good resistance around that low $91 area if we do retest it. If the dollar was to surge up through 91.60, then we could very quickly be testing the 93.20, 93.40 area, which does look like a good resistance level to me. I'll look at a couple more dollar pairs and then we'll move on to the yen pairs, which actually have some trends to trade. Dollar pairs don't. Euro, US dollar is a perfect example of that. Look how we've just been in this sideways channel since January. I use quite long-term moving averages. Black is 50, blue is 100, red is 200, green is the 500-day moving average. These are longer-term moving averages than a lot of people use. And even these are flatlining now. So it just serves to emphasize the fact that this really isn't just a sideways trend. We had the breakdown of the trend line, the 500, the 50 moving average, and the 100-day moving average. So I really did think that this was a breakout trade and we could really jump on a swing trade and run it for a few days, but it just wasn't to happen. I can't find any low risk trading opportunities in the euro versus the US dollar at this stage, which is a shame because it's one of my favorite pairs. Now, cable's in quite a good bull trend. We've broken up above the 500-day moving average. I think eventually we will break up and the pound will push higher. Only thing that worries me is we had an unexpected 50 basis point rate rise last week. Only 25 basis points was expected. So you would have thought investors would have been moving into the pound to take advantage of the higher interest rate. That wasn't the case. And as you can see, the pound has eased against the US dollar. I'm wondering if investors are betting that the UK has a much higher chance of entering a recession. From a chart pattern, there is still hope for the bulls if I'm right about this being a consolidation, some sort of bull flag pattern. that eventually we will break up. Now, we had a buy level around 127.20, 127.00 on Friday, and that did hold the downside. So we'll see if there is a recovery in the pound versus the dollar this week. I think we have a tradable trend in the US dollar versus the Canadian dollar. Horrible sideways action through here. I really did lose track of this pair from November through to May. Didn't know what to do with it again. Moving averages sideways, flatlining from the beginning of January. The 50 and the 100 flatlined all the way through to the beginning of June. Now, I think we have a breakout trade. Look how confusing it was around the trend line for a whole week back and forth through that trend line. Traders not knowing whether we would actually make a move to the downside or whether we would bounce back again, as we had done so many times at that trend line. 1, 2, 3 times the trend line held, and then on the fourth, it broke down after quite a battle between the bulls and the bears. Now we do seem to have, I do believe, a tradable trend, and I'm selling into resistance levels. As you'll know as a subscriber, we did quite well selling the high for the day on Friday. Not a huge reaction to the downside, and I don't like running trades over the weekend, but if you did sell at the high of the day at my resistance level and you're running it over the weekend, I'm seeing the US dollar trading lower against the Canadian next week. That brings me on nicely to the dollar versus the yen. Clearly in a bull trend, we had a bit of a correction. Then the moving averages flatlined again because we were stuck in this sideways triangle. We did break up, and we were quite early on the break. I don't know if you saw my video, I think it would have been 2 weeks ago now, suggesting that we had a breakup and it was time to buy the US dollar versus the Japanese yen. Up we go. Nothing to stop us. Let's have a look at the weekly chart for a slightly longer term perspective. We've beaten the 61.8% fib as well, so that looks pretty positive for the dollar yen. For my subscribers, I'll continue to put buy levels for any pullback, any retracement in the pair, but I think that we'll see the dollar push higher against the Japanese yen this week. Australian dollar versus the Japanese yen has had a really good run up. Now, we're about to retest the high from 2022, which is at 98.43. Anyone want to bet on a double top there? Certainly possible. I'll be looking for negative candles on the daily chart to see if there is an indication that a double top can form. This is the weekly chart. I wouldn't call this a negative pattern quite yet on the daily chart, so we may see one final burst up to retest that high that I just showed you on the weekly chart. One to keep an eye on anyway. For now, I'm buying into weakness. There's no mistaking the Canadian dollar versus the Japanese trend. It's clearly bullish, powerful. It's had a really good run up. And I will admit to being too slow on buying on breaks above here. I kept putting bids in, trying to buy on pullbacks. The pullbacks weren't deep enough for me to get in. Too many other Forex pairs were trading sideways, so I didn't have an aggressive enough strategy to get into a long position here. But I will remain a buyer on weakness, and I will remain a buyer to break above the previous high. Euro yen showing a clear bull trend for approximately 18 months. We did have this significant period of sideways action, but eventually we did break up and we're pushing higher. So I will remain a buyer on weakness. There's no indication to me that this trend is about to reverse. We've got a very nice, easy to spot hammer candle from Friday, but I'm not going to take that as a sell signal. It can be a negative candle sometimes, but I will remain a buyer into support levels, which of course you have on the trade sheet. And if we break above last week's high at 156.92, that should be a buy signal for this week. I've put that on the trade sheet as well, and I've given you targets for the breakout. Pound versus the dollar was a little bit weaker last week, but against the yen, clearly in a very good bull trend. So this is another trend that we can trade, buying on weakness into support areas, buying on a break above the previous high. The pound can continue to push higher against the yen. Yen is in a bear trend against most currency pairs, and I don't see any end to that at this stage. US stock markets have been in a terrific bull run since the middle of October. Again, big consolidation period here, but once we broke up above the green 500-day moving average, that was my buy signal. We rocketed another 250 points. We did manage to ride most of that move, so that worked really well. What's happening now? Do we have a sell signal? I don't think so. I think this is probably just a correction in a bull trend. I think this is probably going to be a bull flag. I don't see anything significant on the daily chart to indicate to me that the stock markets are about to crash. Let's have a look at the Nasdaq and the Dow Jones. Nothing significant on the weekly chart for the Nasdaq. Let's have a look at the daily chart. Just looks like a consolidation in a bull trend to me. Fed continuing to raise rates. It would appear at least another 1 or 2 rate hikes are on the cards. Lots of talk about recession, but stock market's just ignoring it. Very strong. This is probably a bull flag, and eventually we will break up. I have been right about this little pattern here and this little pattern here being continuation patterns, bull flags, that kind of thing. And I just think this is a repeat of it. Perfectly normal in a bull trend. Now, while the S&P and the NASDAQ have been pushing higher in recent weeks, the Dow Jones is pretty much stuck in this sideways pattern. It's been the weaker of the three for quite a long time, and I can't really make a lot of sense of this. Again, when on the daily chart, when moving averages are just flatlining and we're stuck in a range, I struggle to find low-risk trading opportunities, and I'd rather be trading something that's showing a clear trend that I can really get my teeth into. I'll finish up with the DAX, which has been in an excellent bull trend since the beginning of October. We've got some good support for the DAX September future at around the 15,750 area. You see I've got a trend line there in the 100-day moving average. Stock market seems to be detached from reality, and there's no indication that that is going to change. But it is worth paying attention to the weekly chart for the DAX. Now, look at this bearish engulfing candle here. So we've closed 40 points below the low of the previous week's candle. A big bearish engulfing candle. Would I be getting into a short position? Probably not, because if I was selling it here, I would have to have a stop above 16,463. So I'd need something in the region of a 500-point stop. That's too much for me. But if you don't mind risking 500 points, we could have a significant move to the downside if this does play out. And really, the first target for me would be around 14,750. So we are looking at a potential 1,200 point profit for a 500 point risk. The risk reward certainly works if you think that the DAX has topped out and it's time for a correction down to 14,750. I've been asked to have a quick look at Bitcoin, so I'll finish up with that. This turned out to be something of a bull flag on the weekly chart. Let's go to the daily chart. I'm not much of a crypto bull normally, but I have to say at the moment, things do look pretty positive for Bitcoin. Okay, I hope that's helped. If you've got any comments, if you've got any questions, let me know. I'll answer them as quickly as possible. Thanks for watching. I'll be posting some shorts and reels during the week.